Arvind Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street in what has panned out to be a pretty volatile trading session right from the word go. We've also seen it's the broader markets that are feeling the pinch today and seeing extended profit booking from the higher levels as well. Even though it's the Nifty that's now back in the green, 0.2% higher in trade at 21,778, it's the Nifty Bank that is doing the heavy lifting today. 1.4% higher in trade, 644 points up right now for the Nifty Bank. Sectorally, apart from the Nifty Bank, the private banks, healthcare, PSU banks, financial services, FMCG is the other part of the market that is really moving up and pulling up the markets slightly higher. Now, the rest of the sectors are all deep into the red, be it autos, realty, IT index, or the mid and the small caps like I pointed. These are the two pain points in the trade today. 1.5% lower for both the mid and the small cap indices as of now. The oil and gas space also, after having a stellar show over the last many days, is again looking at profits being taken off the table. 1.5% down in trade. It's the metals pack as well that's been losing its sheen, 1.6% lower right now as we speak. Among the stocks that are creating some kind of weight on the Nifty, not letting it go too much higher in trade, are stocks from the metal pack. So Hindalco, Tata Steel, these are the stocks. JSW Steel, they are not performing. Then you also have M&M that's lost 2.5% in trade, ONGC, UPL, NTPC. These are the kind of stocks that are not doing well. You also have heavyweight counters like Infosys not participating in trade today. Even Bajaj Twins, Bajaj Finserv has now slipped into the red, slightly lower in trade. On the contrary, what's still up in trade as far as the Nifty is concerned, you do have Grasim as the top mover now, almost 5% higher in trade. Then you have SBI, Apollo Hospital, State, ICICI Bank, Sun Pharma, Britannia Industries, Hero Moto as among the top movers. Even in the broader markets, you do see a lot of cement movers. ACC, for example, is up by 5%. The Adani Group stocks are still holding up in trade as of now. Among the F&O space, then you do have a lot of cement names again, like Grasim, ACC, that's moving up. India Cements, these are the kind of stocks that are doing well at this point in time. Let's now welcome our guest on the show. Kunal Rambia joins in. He's the founder of The Streets. Welcome, Kunal, and good to have you with us. Tell us what's the sense that you get on the markets. We've been looking at a lot of volatility and looks like we are just going to be managing to end flat after a volatile week so far. How would you really look at the current scenario? And now that the big events are passed by, are there really any fresh triggers that can ensure that the Nifty can hold on to higher levels?
Hi, very good afternoon, Shakshi, and good afternoon to all our viewers. Thank you for having me on the show. So if you look at the last 15-20 days behavior, Nifty has been more or less sideways, and it's showing a time correction kind of formations. But if you look at the Bank Nifty, it has come down significantly from its highs. So if we talk about the highs on the futures, I think we were trading somewhere near to 49,000 levels, and yesterday we made bottom at around 45,000 plus kind of levels, and right now we are trading at around 45,800 on the futures front. So I think from here on, the Nifty might just get into sideways consolidation, and Bank Nifty should outperform from the present levels because of the recent price correction. I think Bank Nifty will catch up. So from here on, I think we'll go stock specific, and on the index front, I'll stay bullish on Bank Nifty.
Okay, you're still bullish on Bank Nifty. So among the moving parts, would you still tilt towards the PSU banks, or do you think now is the time that one can start to increase their positions in the private banks, majors like ICICI, Axis, or even HDFC Bank?
Certainly, the strength is still very high on the PSU banks front. But if you look at the private sector banks, like say Axis Bank, yeah, it was hammered down too much. I think among these private sector banks, I'll be picking up first being the Axis Bank. I think risk reward ratio is extremely favorable, and there seems to be a favorable entry with good rewards in the near term. Certainly, who is holding the PSU can hold with the trailing stocks, but a fresh entry in the PSU seems scary at this level.
Okay, so that's as far as the banking names are concerned. Apart from this, it's the healthcare pack that's been showing some kind of a smart move. It's been in momentum for the last few days as well, and a lot of moving parts here. Initially, it started off with the big players like Cipla, Dr. Reddy's, Sun Pharma. The rally spread onto the laboratory stocks like Divi's Laboratories, maybe even Laurus Labs and stuff, and now or Ipca Laboratories. And now we're looking at the hospital stocks really show some action. So stocks like Apollo Hospitals, Max Healthcare, that's coming back in flavor. How are you looking at this kind of a move in the entire pharma pack, and which way would you tilt more among these moving parts?
So, as you rightly said, these the hospital segments have done really good, and the best among all seems to be like Apollo Hospital, which is trading near to its all-time high. In fact, it surpassed 2021 high of around 5,900 also. So, yeah, clear strength is in that counter. But again, at this point in time, if you look at the risk reward ratio, I think it's extremely favorable for DVs left, because we are heading for the result tomorrow certainly, but the counter is near to extreme low levels. From the high of around 4,100, now the counter is available at 3,650. So one can think of going ahead with a buy on Divi's left with the stop loss of around 3,600, and if this trade turns out to be perfect, then the targets of 3,800 to 3,850 are likely to be seen soon.
Okay, so that's as far as the entire pharma space is concerned, and you've given your interesting stocks that you're looking at. The other moving part is the entire cement pack. It's all started off with in the morning JK Lakshmi Cement coming out with stellar set of numbers, and that stock really pulled up the entire space again. Of course, time and again we've seen a lot of stocks really move up, even though JK Lakshmi Cement is now trending lower than what it had in the early morning trade. But now stocks like India Cements, ACC, even Grasim, for example, these are the ones that are really moving up sharply. Where exactly are you more bullish on among the cement pack, and do you see there is enough merit for investors to start looking at this as a structural long-term trend?
Absolutely. If you remember, we had a conversation on the channel on 25th of Jan when the action was again seen in the cement sector itself, and today is the same day again. We are witnessing a massive run up again. If you look
Yeah.
at the ACC, yes, the ACC is right now up by 4.5%. And if you look at the formation, the typical formation seen is there is a rally again, couple of days of consolidation, and a rally again on the chart. So if you ask me to pick up one again, it's gonna be ACC at the present level.
Okay.
It's reached near to its 2022-23 highs, but from here, if the counter continues, then 2,800 to 2,850 are likely to be seen very soon.
Okay, so that's as far as the cement pack is concerned. ACC as the top performing stock and preferred stock by Kunal right now. Let's also look at, I don't know if you track the Adani Group stocks, and if you do, then can you tell us, what is leading this fresh move? And because, all the, concerns are now looking behind us with the Supreme Court's verdict that came about, a month ago or so. And after that, the strategies, what is it that you've been advising your clients? And at this point in time, is there a merit in one or two stocks from the Adani basket that you will be looking at, even though you mentioned ACC, apart from that?
Certainly, yes. So, since morning, actually, we are eyeing on Adani Enterprise. The only reason being, if you look at the broader consolidation right from 8th or 9th of December, pardon me, sorry, it's the 6th of December. Since then, the counter was in sideways consolidation. There was a fresh breakout seen just a couple of days back, and that was on around 31st of Jan. Since then, again, sideways consolidation was seen, and today we saw very good traction coming in. Counter actually went up, retested. So I think it's well poised for someone who wants to go ahead with favorable risk reward ratio again. So with the stop loss of 3170, one can initiate a buy on Adani Enterprise itself, and the targets can be as high as the previous high. But yeah, in between we can expect 3600 as a first intermediate target. Among the entire pack, I think I'll go ahead with Adani Enterprise as of now.
Adani Enterprises as of now. Okay. At this point in time, Adani Enterprises from the entire pack looks very, very positive. But what do you really make of the kind of fall that we are looking at in the mid and the small cap space today? A sharp sell off has really come in on both these indices. They are down by over 1.5% at one point in time, given today's trading session. 2.5% lower. Also, these indices were really trading at. Do you think again we are going to see a bout of buying from the dips, or is this now could be the beginning point of some kinds of elongated downtrend that we can witness after a long haul of an uptrend that we witnessed in both these pockets, 50-60% remarkable gains over the last 1 year odd or so, and now is the time that at least some sanity will prevail?
See, when we see a massive rally like this, there's always going to be skepticism in our mind when we see the first decline coming from the high levels. But remember, at the same time, we have a higher top, higher bottom formation, which is very much needed for the counters to continue its or resume its up rally, right? So, yeah, today the sell off is really huge. We can see in percentage terms, it's going to be between 7 to 10% everywhere. But if you look at the counters, they are still in the absolute positive trend. Unless and until we see follow through selling emerging, and then we see a lower top lower bottom coming on the charts, I would not really be worried about the positions which are already open. I would advise the viewers to trail the stop loss, wait for a couple of days. If there is a consolidation and the rally continues, trail the stop loss to the recently made low. Otherwise, I think the follow through sell off will give us the clue of whether we are done with the high. As of now, it seems least likely that we are done with the final top of the market.
Okay, fair enough. That's as far as the space is also concerned, the mid and small cap basket. If I have to ask you, is there any particular sector that you still believe that there is enough value to be looked at despite the kind of volatility that we are looking at? Of course, we've seen several sectors in rotation play out their themes. One or two sectors have still remained largely, underperformers, like FMCG, for example. Do you think the time has come for such sectors to now start to perform?
Yeah, certainly yes. If you look at the entire diagnostic space, I think that remained more or less laggard in the entire rally. And the worst performing was again Laura's post results. We saw the gap down open, and now stock has managed to come up again. If you look at the broader formation, it's a massive curve formation. Good volumes are happening on the sector, so the risk reward ratio is extremely favorable for almost all the counters. The best pick under this entire segment can be first Laura's, which is trading at around 390.95 levels with the stop loss of 375. One can go long with the targets of 425. And the second is the Metropolis level. Again, you must have seen the extreme volatility, but this seems to be the perfect level to reinitiate the buy. Stop loss being 1550. One can initiate a buy, and the targets can be as high as 1850 to 1900 again. But this entire space seems to be undervalued and offering good opportunities for long-term investors.
Okay, fair enough. Let's again look at some of the moving parts here. It's time to mark out a few stocks that are doing well from the broader market space again. Aarti Industries, that's got my attention, 5% higher in trade, a very, very strong move coming in. ABB India, that's also moving up at a percent higher. Aditya Birla Capital is moving up. Alkyla Mines is the one that's moving up in trade as well. These are some of the stocks that are moving as far as the broader markets are concerned. How would you really look at Aarti Industries at this point? In case you track the stock, is there merit in this move and to track this move?
Certainly, yes. As we discussed about the diagnostic space, I think the second is the specialty chemical segment, which we saw as again a sideways consolidation post 2021 rally. Almost all the counters were available right near to the extreme lows, and Aarti being one of the counters where we saw a clear higher top, higher bottom is emerging on the charts. Today's volumes are again one of those highest volumes witnessed in last 6 to 7 months. The counter is up by around 5%. I think with the stop loss of around 630, one can go long on Aarti Industries. The targets can be as high as 725 to 730. And again, an advice to all our viewers that if you're holding such specialty chemical segments where we are witnessing such kind of moves, keep trailing the stop loss and hold the position. I think there is a lot of room for the upside, even from the present levels.
Okay, fair enough. Now I'd like to ask you on the new age tech space a little bit. We've been looking at several contrasts emerging in this entire pack. Let's look at Zomato first. Came out with its earnings, again turned profitable for this quarter vis-a-vis the last quarter. We've also seen, the quarterly updates where the company really took those platform fee increases and to 3 and 5 rupees. That perhaps has aided the company's contribution as well on the platform. 3.5% higher at 149.5. How would you really look at Zomato? There were several brokerage houses that still look bullish. Many are also giving targets of even 250 odd. How would you really look at Zomato at the current levels? Do you think it is time for all those investors who'd been looking at things to settle down, company to start performing a bit before they take that plunge? Is it the right time?
So, certainly we saw the massive uptick right from 45 levels, the counter is back to 150 levels. But here, very important point, which we had discussed earlier also somewhere, was that in November 2021, counter made a high of around 160, and from there it tumbled down to 45. Now this counter is slowly and steadily inching back to the same level. So this 155, 160 levels, I'll turn little cautious, and I'll advise our viewers also to turn little cautious. If you're already holding the positions, undoubtedly keep the trailing stop loss, and the trailing stop loss right now is at around 135. With the stop loss of 135, hold on to the position. If it reaches near to 155, I would say take some profit off table. If the counter manages to cross 160, 165 zone, reinitiate a buy. I think then we can expect the targets of those 220, 225. But till then, I'll turn cautious near 155 levels. As of now, we can hold the position.
Okay, so that's as far as the strategy on Zomato is concerned. Now let's talk about the one which is weakening, and that is Paytm. 417 rupees right now. Of course, this stock has been in news for the last 7 to 10 days odd, and we have seen how things have now emerged after the RBI policy. Also, RBI really giving out those statements as well, categorically saying that there were persistent discrepancies, and therefore they have taken this turn step, even though they have alleviated concerns with this impacting the entire financial ecosystem at large and only remaining to this company per se, saying that clearly enough and more time must have been given already to such companies for corrective measures, and only when such measures were not satisfactorily taken in by the companies, then the RBI has taken a stern step to protect the consumers' interest at large. 6.5% down. We did see an uptick of 10% after 4 days, 4 consecutive lower circuits. Perhaps some parts of investors really looking at that pain is far too much and too done. But again, from last 2 days, we are looking at slippage coming in on Paytm. 418 rupees right now. What would you really say here?
So we saw the extreme bottom somewhere in March 22 and then followed by November 22, where there was again a new bottom. The recent bottom is again lower than the previous bottom. But if I try to connect the previous two bottoms, it's just perfectly offering the support at around 400 levels. As of now, it's near to the support itself. I will not be in hurry to initiate a buy on this. So what I'll do is I'll just wait. I'll advise our viewers also, just wait for the counter to consolidate a bit and start making a higher top, higher bottom formation. I think with that, we can initiate a buy. So right now, the levels to watch out for will be 450 levels. If the counter manages to now go above 450, then with the stop loss of 410, one can think of initiating a buy, and then we can trail the stop loss slowly and steadily. But here, remember, the massive sell-off was seen and many people are stuck even during the lower circuit period. So we'll see regular selling might just emerging at every level. So keep the quantity as minimum quantity and keep trailing the stop loss above 450 levels.
Okay, fair enough. Let's again go back to the markets and see how the markets are shaping up. Again, the Nifty is just about 60, 65 odd points higher in trade, 21,780. But clearly, it's the Nifty Bank that is in fine fettle today. After days of underperformance, we've been seeing that at least some push is coming in from the Nifty Bank counter. So, State Bank of India is the top moving banking counter on the Nifty, 3.5% higher in trade. You also have ICICI Bank that's now moving up 2% higher. Axis Bank is moving higher in trade. Even the financial services names like Bajaj Finance, that's moving up in trade as well, supporting the overall move. Kotak Mahindra Bank, that's the one that's moving in. IndusInd Bank as well. That's another bank that's been throwing some of its weight behind the kind of move that we are looking at currently. These are some of the heavyweight counters from the banking names that are supporting the move on the Nifty Bank. Apart from this, it's the healthcare stocks that are moving up. You also have the PSU banks now, led by SBI, of course, looking positive in trade. Kunal, what would you say on the move that we are looking at on SBI, even though the results were a little on the softish side? Do you think after last 6 months have been spectacular for the entire PSU basket? And when we compare the entire 56 listed stocks on the BSE PSU banking index, PSU index, then you'll find that SBI is the worst performer according to the all of them when you compare it with them, because it's just moved 12% odd, whereas the other PSU stocks have actually become multi-baggers as well. So how would you look at the move now that we're looking at on SBI, 3.5% higher, 723? Do you think enough and more can be bought even at these levels on SBI?
See, certainly the levels are elevated levels, but the way the other counters have moved, I don't know really whether we'll be able to compare those counters with SBI being sizable bank. But the breakout was placed at around 650 levels, and post that the counter went up consecutively for 3 days and now trading at 725. I think if one wants to go ahead with a short term mindset, then with the stop loss of around 710, one can initiate a buy on this. But otherwise, I would wait for this counter to consolidate a bit again. See, for me as the individual, I always give a lot of importance to risk reward ratio. So at this level, with the long term mindset, I will not really be keen to buy. I'll wait for the counter to consolidate a bit, or say show some kind of price correction coming in. Once this counter turns favorable for us, we'll initiate a buy at that time. But if someone is holding, hold with the stop loss of 710. If someone wants to trade short term, 710 being stop loss with the target of 740, one can certainly go long.
Okay, let's talk about one more bank, and that is Yes Bank. And of course, we deter investors and viewers to stay very, very cautious at this point in time when it comes to such penny stocks and stocks which are fundamentally weak at this point in time, with the concerns, several concerns around financials for sure. But the stock has been continuously moving up for the last few days. It's 4.5% higher in trade at 31.4. And why it's up is because yesterday there was profit booking, and that was on the back of some of the reports that got floated that said that SBI perhaps is looking to offload 5,000 odd crore rupees worth of stocks, and therefore there is profit booking and stuff like that. Yesterday, we heard SBI chairman Dinesh Khara address speculation around Yes Bank's stake dilution, clarifying that the bank stands on the matter as well. What did Mr. Khara really say? Let's listen in on that, and then we'll come to Kunal for his view on Yes Bank.
Today, the SBI stock hit a new record high. There were some reports of dilution of the stake in Yes Bank. For the record, what would you like to say about that?
That news is baseless.
Okay, that news is baseless. That was a pretty sharp and crisp answer.
So there you have it, Dinesh Khara, in an exclusive interaction with our managing editor Siddharth Zarabi, did clarify that news is baseless, and perhaps which is why you saw again buying action emerge on Yes Bank shares today. Kunal, would you still have a view on Yes Bank for all those viewers who've been probably looking at a short-term, trading or investing interest that they may have had with the kind of move that we are seeing on Yes Bank?
Look at the formation, it was a sideways consolidation. On 6th of Feb, we saw the breakout, and the breakout was at around 25.50. Counter managed to close at around 25.40, 50 kind of levels, and then there was a remarkable rally. And if you look at the intraday behavior of last 2 days, including today, it's again a bit of sideways consolidation. So the trailing stop loss is logically to be placed at around 29.5. With that stop loss, one can certainly hold on to this. I think there is more room for the upside. The counter may show us the levels of 33. We have to keep revisiting this counter regularly because, as you said, the poor fundamentals, and then we'll have to be a little cautious on such penny stocks. But yeah, with the stop loss, as mentioned, one can certainly hold on. Keep revisiting our channel and keep asking the available expert. I think the new trailing stop loss will always be made available. This counter can surprise on the positive side, looking at the volume activity also.
Okay, so that's the take coming in on Yes Bank from Kunal. Kunal, any other particular stocks that you have now spotted in the current market scenario where you may have turned bullish on from a medium to long term perspective? Could you share any of your selected stocks with our viewers?
Certainly, the counter which I'm looking at right now, the one was Adani Enterprise, which we already discussed. The other is from the mid cap and the small cap segment. This is Paras Defense. Now, the only
Okay.
reason for me to shortlist this counter is that from November 2021 so far, this Paras Defense has been in sideways consolidation. It attempted to cross 820 mark almost 6 to 7 times, but it was a failure. Last 3 4 days the volumes have been really good. The counter has just declared the result, I guess 15 20 minutes back. I think this is well poised for a new rally from the present level. It's available near to the support, so with the stop loss of 760 one can certainly initiate a buy on this, and the first target can be 820, and above 820 this counter can really surprise till around 900 levels. So I'm extremely bullish on this, but yeah, one will have to maintain the stop loss, which is 760, and I think one can create the position.
Okay. Right. Let's look at, so this is the view coming in on the defense pack as well. The other moving parts along with a lot of defense stocks were also the railway space that were, looking skyrocketing for a long bit of time. But now with the earnings coming about, there is a lot of profit booking also that's taking place on the entire railways pack. RVNL, for example, is facing the brunt of relatively poor earnings. Railtel is down by 8% odd. Let's also look at Ircon International, IRFC, that's earnings bound as well. And let's see how this entire pack is moving. So IRFC is down 5% odd. How do you look at this entire profit booking that's taking place in the railway space? Should one, in case somebody has really made the best of the move that we have seen in these stocks, would a wise advice be to take the profits off the table? And also for all those who've been having a lot of FOMO of not having invested at the right time, how would you advise them?
Right, so yeah, there is more of FOMO in the market rather than profit booking. But if you look at the recent rallies, I mean, the counters have also gone up too much, right? So if let's take an example of RVNL, this counter has rallied from 185 levels and made a high of 350. And from 350, now this counter is available at 260. But if you look at the trend on a longer term basis, this is still absolutely intact. There is no trouble at all. So I would, rather wait for a day or two and see the consolidation happening now. As we discussed about SBI, that I'm not comfortable buying at the higher levels, I'll wait for it to settle down somewhere lower. I think these counters are now available to us at those consolidated levels on the lower side. We'll wait for a bit of more consolidation. We'll initiate a buy after this consolidation is taken out, with the nearest bottom as the stop loss. So yeah, the on radar, but I think we'll have to wait for some more.
Okay, well, on that note, thanks a lot, Kunal, for being with us on this special edition and
Pleasure.
sharing all the insights on the stocks that we've discussed today. And with that, what we will do is quickly wrap up the markets for you now. 70 points down, 70 points up in trade as far as the Nifty is concerned, 21,787. You can look at a brighter spot, which is the Nifty Bank. Today, surprisingly, we have the heavyweight counters that have rather been underperformers. So ICICI Bank is supporting the markets, Axis Bank, IndusInd Bank. These are the banking counters that are supporting, along with SBI, of course. Those are the moving parts in the markets as well. Now, when we look at some of the other movers on the Nifty, you will see it's Grasim, Apollo Hospitals, Sun Pharmaceuticals, Adani Ports. These are the other moving parts that are helping the Nifty to climb up higher. Broader markets, it's ACC, RT Industries, some of the Adani Group stocks like Adani Green Energy, Adani Ports that are supporting the market move. Nifty Bank, PSU banks, private banks, these are the top three sectoral movers in trade today, along with healthcare, financial services, FMCG, consumer durables. The rest of the sectors are still lagging behind. F&O space, it's Z, that's now up 8% odd in trade today. India Cements, that's up 6.5% in trade. That's the other big mover on the F&O action. You're looking at RT Industries, that's now up 5%. ACC 4.7% higher. Grasim up by 4.6%. Bosch, these are some of the moving parts as far as the markets are concerned. But we'll wind up this special edition right here. But do stay tuned as action follows on your screens even after this on markets and from news from the world of business as well.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.